Hello, everybody. Kirk Spano here with Scott Shooter Henderson for the Major Markets Weekend Update. And Shooter, how are you doing today?
Man, I'm awesome, bro.
You're awesome. You're always so happy and excited. Well, that's good.
Yeah, no, life's good. I can't complain.
And I keep trying to tell people that, and I don't think everybody believes me. All right. So tell me about a major market. Which one jumped out at you this week? What's important?
Starting off with the dollar, you have the chart, the weekly.
What it looks like?
Okay, awesome. So this is going to, in other words, we got some weight in the indices right now. In other words, a little bit of a headwind because of the dollar. So pushing around this 104, that should continue for a little bit. And then, I'm seeing a, decent rally once that lower high is put in is sort of my thought. But I want to jump over here to the SPY, and I've got a couple things that, I spent a couple hours with a couple buddies of mine who focus on gamma a little more than I do. And, they're the math geeks kind of, and I'm not. So, I just have to listen to some guys. And right now we see a huge amount of commercials and the market makers around 491 in the SPY. So we think we could have a little bit of an early rejection there. And with that count, I'm looking for a breakdown of maybe down to 469. However, if that 4 becomes an extended 4, we're looking at maybe 50% back at 441, or it becomes an elongated 4, it goes down to the 78.6. Now, I want to jump, or I'm just going to, the thesis here, like I had thought, it was either last week or the week before, I thought that the Dow would lead. Well, it basically has. And, it's just sort of that rocket ship straight up. So that sort of coincides, that target 1 at 390 with that top around that intermediate wave 3 that we're going to see really right where we are now. So this could also broaden based on that, because once that Dow flow slows down and that seasonality crush comes in, because basically every year, the first quarter we have usually the low for the year is put in, usually the end of February, March, or April, according to that seasonality. So let me jump back to the the NASDAQ, and sort of incorporate that. Now, note that we recovered, we started to reject, and then we started to see some rejection on our high right here around 420.28. The challenging part here is that if we go and look at the FANGs, they're not all participating in this rally. So it's back to those same quality names, and they're rotating in and out of that. And that makes it very challenging. So, but I want to look at the Russells, and part of my theme is going to be sectors today, because that's one thing I want to point out is that as long as that sector rotation continues into that flight to quality and the big bucks are just rotating in and out of those and pumping them, like for example, Amazon was down and then got pumped, right now Tesla's down. So we expect that in the next 2 to 5 weeks that they start pumping Tesla the other way. However, that's a whole different ballgame. We'll leave that for another day, because I even see a potential of $68 on that. But
let's talk Tesla.
Okay.
Give me a minute on Tesla. I just said in the other program that 6 out of 7 stocks in the Magnificent Seven deserve to be there, and 1 doesn't. Well, the one that doesn't, in my mind, is Tesla.
Let's just go to the technicals here. We're looking at this chart right now. The count is showing me that this is an impulse leg up. So when we get this low, wherever it might be now, right down 177.25 from where we are now. However, it could be something else. And that's the, let me, hold on, I got to make my thing disappear. All right. So if we come in and we do a scan of the leg, right? And we just look at this from our, what would be 1. The problem here is this could just all of a sudden become an ABC.
Which is what I think it is.
Right. Which, it puts it back down to the May 2020 lows at $49. So, like I always, there's 2 sides to the road. We don't have a lot of one-way roads in stock. So when the stock goes up, it's going to go down. So we have this cycle that occurs in every tape. Now, unfortunately, when you get to the flats, because basically we're in this huge flat up here, it gets kind of dirty, because you get people who bought the lows and now they're taking profits. Then it back tests and they get in again, and then they're taking profit. And that sentiment, that momentum, that FOMO, fear of missing out, or full fear of loss, it just over, even in Meta this week. I mean, I stood up all night while I held that trade, and it wasn't even that really a big trade for me. But the fact is, it still affects me. It's like, oh man, I just made 1,000%. And at the same time, I don't want to lose it, so I'm going to sell it. That's what I mean by the FOMO, or the full fear of loss. And so that emotional sentiment and momentum is reflective, and that basically is what Elliott Wave measures, or at least that's how I use it as a tool to measure it.
So what would it take, in your opinion, to get thousands and thousands? I have no idea how many people are investing in Tesla, but I suppose it's probably hundreds of thousands or millions. What would it take for people, broader sentiment, to change and say, look, let's think about this logically. Tesla shouldn't be worth 5 and 10 times more than all the other auto companies.
I think you have two pulls. Just let me jump. Okay. You have retail, okay? And then you have commercials, right? Okay. The commercials already think it's overvalued, and you can tell just by the flow. We're 512 million, okay? In the morning, in the opening range in the last couple of weeks, I mean, we're not even hitting 100K. So we already can see it in the flow going into it. It's thinner, okay? Like, Friday, I took some puts, and it's one of the first times I had 800 open contracts, and man, I couldn't get filled to get out. I mean, it was like I waited a minute, 2 minutes, 3 minutes. I was 5 minutes into the trade, and I couldn't get a buyer. That doesn't happen usually in Tesla. Usually I can put whatever I want on there, and I get covered real quick. So the volume's getting a little thin. It's already there. So I think the retail hangs on until they're dead, because you got to realize a lot of the retail investors go right back down here to the dollar range. I mean, they've just been buying it, and so.
And it's religion to them.
Yes. I don't know that that's going to win, because, even one of my favorite trader guys that I spend a lot of time with, he's a Tesla bull all the way, and he still has his original shares, but he's not buying Tesla on this dip. So, the question is, do we go down, and the January 2023 support holds around 113 to 124? Because that's really all that's here. Because realize we're here. We're at this support band. Once this breaks, that 179.83, it's a flush.
Right.
Okay. So the question is, does this hold, or do we go down here, or do we go like further down to equality, and it really get destroyed? Something has to happen besides, and that's one thing Elliott Wave tends to measure. Sometimes it foresees events, because somebody knows, and then there's more people that know, because we all talk to each other just like we're doing now, so it tends to build. So, the price in a stock tends to reflect, all the communications on the planet about Tesla. So, just like I go down the street, I talk to about, Tesla's going to 500, and he passes it to another guy, and then I tell you it's 500, and then next thing you know, you have 10,000 people who are thinking Tesla's going to 500. And vice versa, if somebody comes in and say, yeah, Tesla's going to zero, you pass that around, you got same sentiment. So I think we will find out whether the commercials are in control or retail is in control. Now, just on that thought, history tells us the commercials are in control, period. They're too big. They're whales. I don't compete. When they're running, I get the hell out. Real sure. So,
which is why I use the type of quantitative volume-weighted analysis I use. So let me point out two things here about Tesla. You mentioned that you have a guy who's been a Tesla bull forever. And push that chart back just so you can see all the almost zero numbers. And right, so the people who bought in there, they had faith. Yep. It was religion. They don't really understand the company.
They're lifers.
They can't explain why Tesla would be worth $500 billion or $1 trillion when GM and Ford are both worth well under $100 billion.
Right.
Even though Ford and GM outsell them on cars by multiple.
Right.
So, okay, go ahead and show back to the other side. As you look at this, think about the Gartner hype cycle. This stock spiked in a period of about 3 years. And I think that this might be, now it has to find a right price, an equilibrium price, and it might pass through. So that red line that you have there, the sloped red line, the trend line.
That's the trend support.
That's where it should head to, in my opinion.
Yeah. Now, it's already back tested it shallow here, but it should have been closer.
Right.
Would have been better if it was closer.
So I think it'll get there. But what did we talk about recently is that usually we don't hold equilibrium. We pass through it.
Yeah. So it's an overshoot. Yeah. So this is drive 1. This is drive 2. So drive 3 is going to be an overshoot, or could be. Right. I mean, it's highly likely on drive 3.
So that pink resistance band around 50, $60, I think is really in play. I mean, I'm not positive it'll happen. I'm not making a bet one way or another. You know why? Because I don't have to. So when I take a look at this, I think to myself, what he's doing now is going to show you the 5 waves up. I think that this is probably at least ABC down, but it could be an even more devastating pattern to the downside. And you might see Tesla well under $100 a share. Now, here's the funny thing.
Round trip is, let me get to it, right spot. Round trip is 1650.
Right. So
that's a 3 drive right there.
So here's the thing, folks. I want you to prepare yourself. Let this marinate for the months and months or quarters and quarters it might need to marinate. And it starts to put in a bottoming process. You need to be a buyer. Why? Because psychologically, it'll be as bad as it can get.
Yeah.
All these people will lose their religion. I think there was a song about that. And when they lose their religion, we will go on what is called the slope of enlightenment. And we will just invest in a more rational way. Well, we know that EVs are hitting hard. And I mentioned in the chat that 2026 was always the baseline year for when we saw the EV inflection point. And that goes all the way back to my visit to the Consumer Electronics Show in 2020. So I'll tell you now is that is all pushed out by 1 year. The factories, the law is still in place about mileage standards, but that might get extended for a year anyway. Everything seems to have been pushed out 1 year. So all these negative narratives that you're getting on EVs are short term. They won't hold long term, but they will give you an opportunity probably to buy a lot of the EV stocks at dirt cheap prices. In my opinion, Ford and GM are already dirt cheap. I think Volkswagen is kind of in the middle, something you could look at some point. I think Volvo is following a similar strategy as Ford. And you go through this basket of companies and you say, okay, as this washout in EVs happens over the next couple of years, because the market isn't accelerating as fast as the Uber bulls said it would accelerate. And, you know, I was always a middle of the road guy. In 2020, I said 2026. And when everybody else was saying 2022, and then COVID hit, and then that got pushed out. I'm now saying 2027 to 2030 is your big ramp up in EVs. Lots of reasons. It has to do with the technology, it has to do with the factories being built, it has to do with the capital expenditures, blah, blah, blah. All the things that make a CapEx cycle, that make an adoption curve an adoption curve. When Tesla gets cheap, at 500 billion, you probably don't want to be in it. At $1 trillion, you sure didn't want to be in it. But at $100 billion market cap, which will be in line with Ford and GM at that point, you may want to consider buying it, especially if in a year or two, we think that they legitimately have an edge on the other companies. And I think a lot of that will come from what people feel about Elon Musk at the time. Does Elon Musk have a renaissance, right? We are famous for forgiving people their transgressions. And I think Elon Musk is one of those sympathetic characters that even though he's weird beyond belief and he's on the spectrum at a certain level and he clearly sees ethics in a different way, he's a redeemable personality that I think will probably give a second chance. And we forgive people. It's just the way we are. We forgive people. Maybe we shouldn't always, but we do. So if Tesla gets cheap and Elon Musk is forgiven and redeemed, probably going to be a stock to buy. So I just want to say that a year or two ahead of when we're going to have to think about that. So prepare for it and think about this situation when you think about all the other stocks out there that are on these big wavy charts. There are times when they get legitimately undervalued and sentiment gets so bad that you just ask the question, where will they be in a few years? And those are usually spectacular times to invest. That is the Paul Tudor Jones method of investing. The guy that called the crash in 1987 and ended up making so much money that he founded Robinhood, the Robinhood Foundation, not the stock exchange. He says, look, I ignore most of the stuff in the middle. And people say that I'm going to miss it because I ignore all the wiggles in the middle. Now, Shooter lives on those wiggles. I don't. I try to find value that's having a change of direction. And that's when I talk about don't buy things that are falling, right? Try to avoid them if it looks like they're going to keep falling. Avoid the negative momentum. You'll usually get some sideways movement sometimes even with sideways movement, sometimes it falls off a cliff again. But in general, you'll get these areas, these bottoming processes to buy. And then when it goes up, man, those first couple moves are usually big, and then it pulls back. And then you get that long wave 3. And I think that if we prepare ourselves mentally and understand the fractal nature of markets and the competing interests of value and sentiment, popularity versus true worth, right? Lots of things that are popular that probably aren't worth much. A lot of things out there that are pretty that down the road you figure out were crazy. A lot of marriage experiences in that one. You start to figure out, hey, we think Tesla's going to keep falling, but that doesn't mean that it's uninvestable forever. There will be a bottoming process. And if Tesla has an edge, and if Elon Musk is redeemed, now all of a sudden you have another growth story.
Yeah. We're going to find out if they're going to save it quick, though. I mean, that's, the rotation, if it goes, they will rotate into Tesla. Now, whether or not it brings us out of this, I don't know. But, it definitely has a fantastic theme I think it's a Model 3 or the new version or the cheap version that they have. Once they actually launch that, if those production numbers actually come out, because it's like 4x what they're doing now, that will be a catalyst. So let me jump back before I forget my train of thought. I want to jump back to the Russells and let me cover, just the thesis of indices, right?
Russells are a nice family.
Yes. Okay. Well, right now, we're in our primary wave 2, primary wave 3 is down about $1.70. So, we got about 7 or 8% to the downside here. The theme here is that, if that seasonality thing is going to play out, right? The Dow will turn and take a drive down to our primary wave 4, right? The NASDAQ will roll over to some degree. I don't know. We got to lose Meta. We got to lose Google. We got to lose Amazon again. Otherwise, it will hold up. But that does not mean that we don't roll over with the SPY at the same time. And notice how close those rollovers are. So, that I think is going to be our challenge going into March, is we know seasonality is there. So how do we want to handle that as far as our portfolios? How do we want to trade that? So that's something you and I need to work on a little bit, because, I just brought this up yesterday after my work, coming into this meeting, looking at everything. And I was looking for that push we got Friday. And, that was really my confirmation that, hey, this is going to happen. We're going to get overbought, and then we're going to roll over. So let me jump to.
Hold on. 2 things there. First of all, let's think about this in terms of how the Fed looks at the world, because in the short term and the long term, they matter. In the short term, they matter because once they finally throw some accelerant on things, they'll get a turn up. So maybe the Fed is thinking, hey, we get this little wiggle in the market in February, and then going into the next Fed meeting, probably people will think like we do, which is eventually they're going to loosen.
Yeah. But the election is when? September? November. Okay. So, so our Fed meeting before that is where they're going to cut.
I think they're going to cut in one of the next 2 meetings. And I think that is pretty likely because the banks are going to need it. But my point is, if the Fed truly wants this market to go up, but it wants it to consolidate a little bit, and you get your waviness, you can see this market turn over and then hit that target 2 and then really take off from there. So I think if you think about big picture stuff and you think about, okay, how do the Federal Reserve and the Treasury Department look at the world, and you try to look through their eyes, and then remember that they're the most powerful entities on the planet. You start to think, okay, if they want to get a little correction, but not a big correction, if they know that tax receipts drive the budget, right? We had an incredibly low funding this last period. So people all thought that we were going to have to borrow hundreds of billions of dollars more than we did. And it's because we got a bunch of tax revenue. And if the stock market goes up, we get a lot more tax revenue. So what we have learned over time, over the last 40 years, is that tax revenues largely follow the stock market. So when the stock market is down for a year, we get less tax revenues. And then when the stock market is up for a year, we get more tax revenues. And since the stock market usually goes up, there's been increasing tax revenues, even though we fart around with tax rates. There is a clear incentive for the Treasury Department, because they have to worry about a $34 trillion Treasury market, to make sure that the stock market keeps going up and that interest rates ultimately get to around 1%. I believe chief investment officer, if she's not the chief investment officer, she's one of the higher ups at JP Morgan. She pointed out that their forecast is for the real interest rate to get down to about 1%. So inflation minus the interest rate. And for that to happen this year, that's way out of consensus. Everybody is talking about a real interest rate of 3 or 4%. And I agree with them. You know, that I've been talking about the real rate of interest has to get down to between 0 and 1 so that the debt that we do carry is cheap. You know, so with interest rates this high, the amount of money that we're paying in interest, which is about 8 trillion of the 34 trillion is in foreign hands. The other 26 trillion is either in American hands or on the Fed balance sheet itself. So the interest rate carry forward long term has to be lower until we start to see a large transfer of wealth. So as the baby boomers die, we get a lot of inheritance taxes, and that will drive tax revenues, but that's probably not for another decade or two. And we have to manage this in-between period for the next 20-ish years where the benefits that we have to pay, which drives the budget higher, is offset somehow. So I think that we're going to see a lot of asset inflation. I think we're going to see a lot of money printing a la Japan. And I think that the angst is going to give way to euphoria because the millennials are in their peak earning years. And again, that doesn't mean that we won't have big hiccups. That's what you're a for shooter. However, the trend will continue to be up. The dollar will drift down a little bit until there's a crisis. And every time there's a crisis, it spikes up. And then it gets to drift down again for an extended period. So you get your spikes up in the dollar that last maybe a year, and then it drifts down for years and years until there's a crisis and it spikes up again. And that's just the repetitive nature of things. And that's why we should always focus on, okay, when are the opportunities to buy? Because the opportunities to sell are fewer and further between. And generally, you're better off being a buyer and waiting for your trade to become good than being a seller and just being out as it goes up. So when you take a look at this chart here, what would play into that theme? Oh, and one last thing. The difference in valuations between large caps and small caps right now are the biggest in 50 years.
Mm-hmm.
I think that, yeah, so there has to be, right? It's alligator jaws. Now, what do we know about alligator jaws?
They get wider.
But
they get wider and then they get fast.
Yes. So so the last time this happened, there was a 12-year outperformance for small caps. We're not going to get 12 years of outperformance on small caps this next time. Why? Because the difference is that there's so many indexers now in the large caps. So you'll get the alligator jaws to snap closed, but then they're going to open again. That's all I got to say about that.
The way this looks to me is that we're going to have this B and then we're going to flush right there. I was probably a little early, but I still think we go south. I think it's pretty aggressive from where we are.
Luke Grumman talked about that this week, that it behaved unusually after hours one day.
Yeah.
And treasuries are typically, you want to own them when everything's going to hell and they cut rates.
Yeah. And the bond sales have been hitting us too. Yeah. It's not been on our radar. I mean, last year wasn't on my radar. The year before it wasn't on my radar. It's on my radar now because every time we have a bond sale, it hits indices, not usually in a positive way.
So the bond sale, which I just mentioned a minute ago, was lower than we expected it needed to be because there was increased tax receipts. And that probably will hold up until April, May. So the Federal Reserve is forecasting smaller bond auctions through the next quarter. But then after that, you're probably the second half of the year, you're going to have more need for U.S. Treasuries being issued. So who's going to buy them? Well, it's going to have to be the banks.
You know what? This is, I'm going to jump here. Okay. Let me finish TLT and then I'll just jump to that thought. Okay. So, RC, is it going to become extended or is it going to become elongated or is it going to be equal? Like right now, the projection is. By the way, that's my projection, not the AI. I typically use the AI to work up a chart, and then when I like something better for whatever technical reason, then I adjust it for that. So I think that's one of the three outcomes here. If we break above that 23.6 fib, I'm wrong. All right, that's real simple. So let me jump over to that thesis. Bitcoin. What happens if the Fed is staking their Bitcoin?
I don't know. Legally, can they?
Why not? There's no rules on it. I mean, but no,
Wild West.
If the Fed actually staked Bitcoin, how much does that actually affect the debt?
No.
Because I think it's a great question, but that was just my thought off basement. I'm just saying. See, I think
thought about that.
Yeah, yeah.
I do know that with all the Bitcoin that the government has confiscated from criminals,
it's big.
Essentially the United States, I believe we have the largest Bitcoin holdings after China. And now with emerging markets buying it, and the world clearly has dollarized over the last couple generations, but it's also going to Bitcoinize to a certain extent too. So the value of Bitcoin going up, with us being one of the two largest holders, is right. That's a bullish theme. I mean,
yes.
If the United States can make a whole bunch of money on Bitcoin going up 6x, which is what I project, 6-7x, I think 300,000 is really a given at this point. And who knows, maybe FOMO gets it to 1 million for a hot minute. So the idea around Bitcoin on a global scale is that it really needs to reach a market cap of $5-10 trillion. And it's not anywhere close to that right now. What's the market cap of Bitcoin right now?
I'm looking it up. It's not something I typically worry about.
But like I said, when you think of the world in terms of market caps, it becomes a lot more apparent what's going on, because you can understand Grandpa's wisdom better of follow the money if you want to understand things. And I believe the market cap of Bitcoin is well under $1 trillion. So if it's going to become part of the international monetary system, you expect that it would carry a 5-10% valuation of all the currencies out there, with 100 emerging markets all dabbling in it. I mean, because that's really what's going on.
844 billion.
Yeah. So at $5-10 trillion to make it part of the international monetary system, I mean, just okay, there you go, 5-10x from here, 6-10x from here.
Yeah.
It's not hard to see what's going on. If there's countries adopting Bitcoin as part of their model, right, as a way to protect themselves from the United States and China, which is what it is largely for them, it's not hard to see this at $5 or $10 trillion in market cap, or maybe even higher.
I just want this C go away. This 34K. Let's get that out of the way. All right. Yeah. So, we got this ABC, so our back test is what is in play right now, which is off of here. 50% back is 43,759. And where did we reject price? Right there. Boom. So that builds on my conviction that we're going to have one more run.
On your daily chart, maybe, can you see where outflows switch to inflows on the net ETF? So, Grayscale.
Which ETF? Grayscale?
No, not all of them. Aggregate. On aggregate, here's the question. Knowing the right question to ask is usually very important. So for a couple of weeks, Grayscale saw outflows, and that put pressure on the price of Bitcoin.
That was FTX sales, though. That's what cost it.
It was sales. I mean, it doesn't matter who it was.
Well, it was forced sales. It was a liquidation event. So
it doesn't matter why.
Right.
All that matters is that money was coming out of Grayscale, and the money going into the other Bitcoin ETFs didn't fully offset that. And that's why you got pressure on the price of Bitcoin, is because net sales exceeded net purchases.
Right.
So outflows exceeded inflows. Very standard economic definitions going on right here.
Yeah. I wish I'd seen that. I mean, by the way, as a group.
Hold on.
Go ahead.
Listen.
I'm listening. I've already had 2 cups of coffee. So
I could tell. I would have thought maybe a little cocaine too.
No, I don't go there. Don't give me any ideas.
So when outflows exceed inflows, right, you get prices go down. And you can see that from that one point, that green dot, all the way down. I believe it was Tuesday, and I don't know if this chart says that, but on Tuesday, the inflows started to exceed the outflows. So that means more money was going in than going out of Bitcoin ETFs.
If we go back 5 days, that's, that would have been Friday.
There you go. See that jump right there?
Yeah. That gap. Well, that was Monday's gap.
Right. So that is where we started seeing inflows exceed outflows, and then price followed. So if inflows continue to ramp up, and we've talked about the investment advisor gradually getting into it, that means that there's going to be a perpetual stream for the next couple of years of money in Bitcoin. Keep growing. Right, because if Bitcoin outperforms, what happens next?
That's something I'm trying to get, by the way, is the adoption rate from the stock advisors. I'm sorry, we might have
I don't know who's going to be able to give you a good number on that, but I can tell you as somebody in the industry that I still am not hearing many. The only people talking about Bitcoin are people who have always talked about Bitcoin. You're still not hearing, the guy that sits down and writes a financial plan and pretends to know investments talking about it.
It's not on the front page yet.
No, well, it's because 4 out of 5 people who are financial advisors aren't investment people. They get the CFP or they declare themselves, I'm a retirement income expert or whatever the fuck they call themselves, and they don't understand investments, but I can help you make a plan, and that's what they do. And they sell you all kinds of shit that they don't understand because their brokerage or their advisory firm tells them sell this shit because they'll buy it. And you just gotta say flowery, beautiful things that they will understand and not understand and feel good about, except when they get scared and then you sell them something else. Those people, which are 80% of the people in my industry, don't understand Bitcoin yet. And when they start selling it, they probably won't understand it then. But because it went up for a while and because their client's neighbor talked about it, now it's acceptable. That adoption is going to take a couple of years. I saw it with ETFs. I remember when ETFs were brand new, and then I'm just going to stick with my American funds. Well, dummy, if you bought QQQ, you'd have made twice as much money. So the adoption of advisors will be slow, but it'll be steady, and it'll keep ramping up until a year or two from now we get a FOMO rally in Bitcoin, and all of a sudden it's at 300 or 500 or 600,000 or wherever it gets to. And then you have to think about, all right.
Back to that thing as a group real quick. Hey, I only have 2 eyes and 2 ears. So like, for example, what happened with FTX and then liquidating it, I didn't connect the dots between FTX and GBTC. So if any of you folks out there hear information like that you think would be important to me in my work, by all means, I'd love it if you reached out and just shot me a quick message, because that helps me do a better job. All right, let me jump back to where I was on the markets. Okay, I wanted to cover SECT, which is a main sector rotation ETF. And the reason is, once we get this back test at 46, and forgive me, I got construction going on. Hopefully my is sounding this out. He's cutting stuff. So, my next entry is down about 46, but then we should have a good rally. So what this implies to me is that this rotation that we're seeing in the Magnificent Seven is going to continue. Once we have a little bit of a WAN, so we may have a period where breadth continues for a little bit, but then it's going to resume. Does that make sense?
Yep.
Okay.
So what's the implication for QQQ then?
Yeah. Well, rotation within the names within the NASDAQ. So that's one reason why I think that we might flatten out up here at some point, whether it's here at this 3 or, this is a good point for us to build out a flat, very much like we did in the NASDAQ, but probably a little broader than that, maybe a flat like this, something like that in the NASDAQ. So, we'll just have, let me put a little box up there so you guys can see what I'm thinking. So maybe something like this up there where we build out that flat like that. Make sense?
Yep.
Okay. So then I also wanted to cover GLD because we're in potentially a breakout here. Now this, has a number of implications for me, because this sort of implies a flight to safety. So that could correspond with some kind of escalation in the Middle East, but that's just, but we should have a good breakout. I mean, our 3 measures up here to 210 from where we are now. So that would put us at about 2,500 gold.
So if we get war and a looser Fed, do I finally get my $3,000 on gold?
Well, yeah, our primary wave 3 would be about 3,100. Yeah. So, but that's what I got, bro.
All right.
Was that good enough?
Gold.
I think it was a good show, man. I enjoyed it today.
QQ. Wow. Small caps, biggest valuation difference with large caps in 50 years.
Yep.
Yeah, there's a lot going on.
Yeah, a lot going on. Yep.
All right. So for folks who are rare investing in members, Shooter's weekly swing trade notes, we've made a little modification to it. We're going to stick with the 3 top trading ideas of the week. He'll cover everything you want in chat. However, he's going to give you 3 ideas every week. His conviction trade, right? The thing that you're most hyped up about, and then a stock and an ETF. So some weeks it might be a crypto, it might be Bitcoin, it might be a stock, and it'll always be a stock and an ETF, and then something that he just loves. And it might be a stock, might be the ETF, might be Bitcoin. We'll see. But 3 ideas, because one of the things that folks were telling me is that Shooter just does so much stuff I can't keep up with. And I understand because Shooter is a caffeinated man. And
I love what I do, bro. What can
oh
I
my
say?
God,
You know,
you cover
I,
so
I
much
have dreams
ground.
about this shit.
I sit and meditate. So it seems like you're on a treadmill.
Yeah.
But we're gonna go to 3 very actionable ideas for the rare swing trading. He'll cover more stuff in the chat with you if you have questions because you're doing other things. But the 3 big ideas every week, 1 stock, 1 ETF, and then 1 something else is what we're gonna focus on. And we want to make those 3 trades like as bulletproof as we can week after week because hey, if we can trade around the edges and add, a couple points a month, that's a lot of money over time.
Mm-hmm.
So there you
Agreed.
go. All right, everybody, have a great Saturday. You'll probably not get this till Sunday, so have a great Sunday and a great start of the week. I have The Great Normalization by Jerome Powell coming out this weekend. I have a new Grandpa Stocks list comes out. We will do the webinar at noon on Monday, and then I am getting on an airplane and going to Las Vegas for 3 days. And then I will come back for Friday.
Cool. Send me those dates. Maybe I'll shoot out.
No. And I got plans. And I'm playing poker on one night, and I'm hitting my parents up for Italian beef for lunch on one day, and we're going to Mr. Chow's on my birthday because we couldn't get in last time. And then we got to mix in some slots and some craps because I'm on a 5 tier credits. They gave me 5 tier credit multiplier, so I can become a diamond status in 1 3.5 day trip if I gamble like a degenerate. So we will see. Although they count my dinner, so we're eating at a Caesar's restaurant because they're going to count that 5 times. So if we spent $300 on dinner or more, it's a lot of tier credits. So last year they gave me a trip to the Bahamas, which I haven't taken yet. I just want to keep getting trips to the Bahamas for free, right? Free Bahamas. Who doesn't want free Bahamas? Look behind Shooter. He's in the Bahamas. All right, everybody.
Yeah, I wish I was actually right now. I'd be enjoying it a little more.
I still think that it's the most likely place I get married. All right. Take care, everybody. Have a good weekend and a good
All right, great show, Kurt. We'll talk soon.
Take care.